All right. Hello, everybody. Just wanted to send you guys a quick weekly review. This is Max. Ignore this really ugly curtain behind me. I'm actually at a hotel. Just finished attending a big event here in Texas, but wanted to get you guys ready for this week. We do see some tremendous opportunities. First thing we want to look at is the dollar index, and what we can see here, we finally have broken out here of this head and shoulders. We broke the neckline, actually, I believe it was on Thursday or Friday. As you can see, this is what you call a head and shoulders, which is also a reversal pattern. So I wasn't really sure if it was going to be a false breakout or what, but we clearly broke through. So now we have a confirmation in the direction of the trend. So we are bullish the dollar. We have some confluence here at the 200-day moving average. So what we're looking for is a pullback to the level here. And based on that pullback, wait for confirmation, and we'll see a continuation up, or we'll see a reverse right back down. But bottom line is we are bullish now just based on the structure breaks with the dollar. So why do we use the dollar index as far as an indicator? Well, the reality is if we're trading currencies, right, especially like the euro, dollar, pound, dollar, if we know the dollar is overall bullish, that gives us a bias against foreign currency. So remember this, guys. If the dollar is bullish, foreign currency is going to be bearish, and vice versa, meaning if the dollar is bearish, foreign currency should be what? Bullish. So we like to use that as a correlation when making decisions based on our directional bias. So now let's look at some more confluences here. We're going to look at our government bonds, our 10-year treasury notes, and see very similar price action. We can see breaking of structure. We can see that the treasury bonds are bullish. Typically, the dollar and 10-year bonds correlate in a positive way. So when the dollar is going up or when treasury is going up, we should see the same thing happening with the dollar. Let's look at some commodities. Gold here. If we look at gold, what we should see happening here is the dollar goes up, gold should go down, right? We actually cover this in foundation to effect. So what we see here, notice how we have this swing high right here. Notice these clean highs. So we know this is something eventually we're going to run, right? Whenever clean highs get left behind, we know there's a lot of liquidity there, and eventually the market maker is going to take price back there, take all those stops, and then from there carry on in the direction of wherever they want to go. But in the meantime, we can see they've respected this. These stops are still intact. We saw price made a run up, but failed to actually clear this high. So we can see a fail to make a higher high, indicating a weakness in this direction, in this up move, right? So based on that, we can see price came up, failed, came down, and now we're right back into this liquidity block, and we're sitting right here, right around 120.61. So here's the thing. If the dollar's going up, we should see gold going down, right? So what I'm using gold for right now, aside from an opportunity to trade, is to get, again, confirmation of the direction of the dollar. So we can see, based on this price action right now, overall, we've been bearish. We did see a pop, intermediate high, and prices come down. And now we can see price has left a higher low right here. So we have a low here and then a higher low here. We're sitting right above the 200-day moving average. So, you know, I don't know if we're going to continue to go up or what. It's possible we might see price come and clear this midpoint here. You know, if you're into pattern trading, this would be the X to A to B point, and then C to D, right? So it would look like something like this as an example. So price, if this is happening, we would see this B point get cleared. However, what we're looking at right now, it's obviously the market just opened up. It's Sunday here in New York. Well, I'm not in New York. I'm actually in Texas, but you know what I mean. Bottom line is the market's opened up. We're seeing price sit right here on this order block. We failed to take out this low right on the moving average. So we're just waiting to see where we go from here. So looking at this scenario, though, I would have to say, yeah, we're overall bearish on gold, which would also give us a confirmation of the dollar being bullish. Okay, so we take that information. Now we're going to begin looking at some of the major pairs we like to trade. So let's go ahead and look at first the euro pound. Why do we look at the euro pound? We look at the euro pound because this is going to give us correlation with the euro and the pound, seeing which pair or which currency is going to be bullish, which currency is going to be more favorable in our trade setup. So we can see right here that we're in this corrective move currently at the moment. We can see this nice impulse move down. We see price has created some clean lows. We see price made an attempt up, came down, failed to take this out, and now we see price dropping, breaking structure. So currently we've broken support right here As you can see, we've broken support. We're below our moving average on the daily, so this would indicate a bearishness. So we're looking to see if price is going to actually come down lower. So we want to look and see if that's the case. What this would indicate to us is the euro should be getting weak and the pound should be getting strong, right? If this continues to drop this week. So what we're really looking at are these clean lows. We want to see if these lows are going to get cleared out, and from there we might see a confluence with this moving average. I believe this is a 100-day moving average. Let's verify that. It is a 200-day moving average. Got my colors mixed up here. But we might see price come in, clear all this liquidity, and then from there continue to rally back up. So we're going to wait and see how price reacts at this support level. So now let's begin looking for our setups. Looking at the euro dollar, we can see finally, in fact, what we see is a reverse correlation here, negative correlation with the dollar index and the euro, even though they're highly correlated or highly connected. What we can see here, let me just drop down, and maybe you can see it here on the weekly chart. We can see a head and shoulders pattern as well. So notice how on the dollar we had a head and shoulders pattern. On the euro dollar, we see the same exact thing. We finally broke through the neckline. So we see this massive engulfing bearish candle breaking through the EMAs, clearing out these lows. So now we're looking for an opportunity to take a trade. Now, where would I expect price to go towards from here? Well, it's possible we might see price actually move up. And let's actually clear this out. We might see price move into this zone here and see if maybe it might retest. It might retest and reload. And then from there, we could see price actually bounce off this liquidity block right here. So I'm looking to see if price is actually going to come back, retest, get a confirmation, and we can see price move further down. And so we would be maybe potentially looking at this level right here. That's the area of interest, 112.854, which, you know, I don't see that really happening overall like in the next like week or two. This is a weekly chart, but that's a potential zone that we could look at. More short term, I would say probably closer to maybe like right around here, 114 or even 115 big figure or 114 mid figure. So we'll be looking at this overall level. Notice how we had resistance here, price broke through. So we might see a retest of this level before we potentially continue to go up. So we're going to wait and see, but bottom line is we're bearish on the euro dollar. Part of the confirmation would be euro weakness versus the euro pound and dollar strength based on the dollar index. Okay, let's move on. Let's go to the pound dollar, also known as the cable. So looking at what's been happening over the last like couple of weeks, we've been sideways correction. We see price in this up channel. We saw price breakout. It was a fake breakout because price moved right back into this channel. And notice how price is respected. So we have this low here. And notice, let me actually just keep it consistent here. So we have our low here. Price has moved down, made an attempt, failed, made an attempt, failed. So we're sitting right below. I think we're going to close this range, honestly. I think this is what we're looking to see. Maybe price to run out this low and tag this liquidity block right here, or this breaker right here. We're going to be looking at this overall zone of opportunity. We're going to be watching this area. We also have this trend line as confluence and a big figure, which is at 130. So we're going to be watching for 130 this week to maybe look for potential buying opportunities. Now, if price breaks this structure, if we see price break down, so let's see, it might be, this could be creating a 1-2-3 pattern. Let me show you what I mean. It's also known as the BRC, all right? If you saw that video we sent out. So we see price creating this swing low and then this this flag-like pattern. It's obviously not complete as of yet. And then from there, we might see price continue to create another extension down, clearing, in fact, this low, and then from there, testing this level right around here. If we were to use our Fibonacci levels, let's go ahead and see what the extension would be on that. I believe it might be a 1.618, and let's see, and that's not a 1.618, so it might be a 1.27. So we'll be watching this area here. So the 1.13 extension, 1.127 extension overall, if price does break, to see if we will see a continuation down. However, based on the analysis, I do expect to see price to drop because the dollar is bullish. But I also expect to see the pound to gain strength. So with that being said, we might see a temporary breakdown before we see a move back up. So we're going to be watching this pair. There's no trade as of yet with this specific pair. I think we are overall bullish, but we just need to wait for the right opportunity. So we need to wait and see how price responds once we get to support. We're going to be watching this low to see how price reacts. Okay, part of being a good trader is being patient in the setup, not making assumptions. Never assume price is is going to do something. See, part of trading is you want to wait for price to unfold. Let price do what it does, and when you see it clearly, you get that confirmation, that's when you want to pull the trigger, right? You're a sniper. That's the whole key, right? Okay, let's go to some of our yen pairs and see what's going on with that. So looking at the dollar yen, we can see we finally broken structure. We've been in this overall corrective pattern. We know on a larger time frame, I've been calling this for quite some time now. We see this massive impulse move out. We see this bullish flag like pattern. We see price just now broke structure right around here. So the question is, are we going to continue to go up? I expect to see price to continue to go up. Part of the reason why we have our clean highs, we can see the structure of price that's being formed right now. We can also just look at the overall structure of what's happened. Let's actually analyze this really quickly. So we can see price, actually, let's just go ahead and use this level right here. So we can see price. Let me actually just bring it a little closer so we can really just look at all of the price action. Okay, so we can see price actually breaking down in a variety of zones here. So we see price has actually moved up to this level here, 103, came down, retested, held, came back to retest resistance, failed, and then consolidated right here. So this is the zone that we can see that all the orders got placed, and it was accumulating for months, and it finally broke out. Now we see price revisiting that same area. We see a massive reaction out. We see price came into this level here. Notice this area here. This is a major supply area, hence why we see price break down. But notice how price didn't just drop like a rock. It actually came down, choppy, sideways. Look at the difference in price structure. So we can see impulse move, momentum, and here we can see a choppy, sideways-like structure. So this is the indication that this is a correction. This is not an impulse. This is not momentum. Even though it's on a weekly chart, this is what we want to see. This is the correction. So we're expecting to see a completion of this move. So we have our move here, and then we're looking for something like this. Something here. So A to B, B to C, C to D, and why? Because we have these highs here, which have yet to be filled since June of 2015. So if we do that, that'd be a perfect measure move to clear out the liquidity here, and hence why we're bullish on the yen, okay? Now look at other pairs just to correlate, and that is the reason why we look at these other pairs. You know, if you know how I trade, I don't trade a million pairs at a time. I only trade about 4 or 5 pairs, get to know them like they're my best friends, so I know everything about them inside and out. One of my first trading mentors told me that trading a pair is like having a girlfriend. You have to know what makes them happy, what makes them upset. You got to know when to trade, when the right time to trade them is, because the more you build that relationship with that pair, the more you understand what the price action is telling you, because not all pairs move the same, okay? So we have to realize that even though it's similar price action, a lot of times we'll see like US Canadian dollar has different behavior than the dollar yen, and vice versa, right? And so anyhow, looking at what's going on the pound yen, we can see price, again, in this corrective structure. As you can see, price attempted to break out, actually cleared out this high, pulled back. We're now in this bullish, bearish flag. So I'm expecting to see price complete. In fact, we're going to be looking for a measured move to the downside. Now, you might be asking me, well, how is that possible? If the dollar yen is bullish, how can we expect the pound yen to become bearish? Well, it's possible that price actually does diverge, right? We see that happen quite often. So sometimes pairs do move in sync, and what we'll also see is them move out of sync for a season and then eventually move back in sync. Now, a lot of it has to do with the pound and the weakness in the pound over the last couple of weeks. Obviously with all the talk around Brexit. So that's what's influenced the price action. But looking at what happened here, see, I was expecting price to drop actually last week, and it didn't do it. So we see price in this corrective move, and then what happened? Price broke out. We see price ran up, failed to clear this high, so that was the first clue for me that this was wanting to go down lower. So price did break down. We see the structure here. Let me just zoom in. Remember, it's all about structure. We see price broke structure right here, cleared that out, and now we're seeing price sitting right at support. So we're waiting to see. I'm actually expecting to see this. If this trend line breaks, then we're going to see price continue to go down and potentially fill right here at this level 146. So we're going to be watching and waiting. We have all this confluence here, so we're looking to see this to unfold potentially this week. Let's look at the dollar Canadian USDCAD. So we can see we're also in a head and shoulders like structure as well. So we have our left shoulder, our head, and then we have our other shoulder right here. And again, it's not perfect. Price is isn't always creating perfect structures, even though price is pretty perfect. Again, we're still overall bearish on a longer term, bigger perspective. We're still bearish. I mean, look at the price action, guys. We can see this massive move down, and now we're just in this massive corrective structure. We didn't break these highs yet. I know we probably will. Look how clean these stops are right here. What I'm expecting to see take place, we just broke structure here. I'm expecting to see these highs get taken eventually, right? Once these highs get taken, you know, we might see price drop right back down and continue in its downward trend. So we're going to wait and see what happens, but right now we're bullish just because the dollar's bullish. But here's the other concern I have, right? If we look at oil, oil's extremely bullish. Let's look at oil really quick. Oh, you know what? That was oil this entire time, wasn't it? My bad. So my apologies. This is oil right here. Oil is bullish, extremely bullish. Let's look at the Canadian dollar, and here's why, okay? Because they're highly correlated with one another. If you saw, I believe it's module 9 or 11, where we talk about economic indicators as well as correlations, commodities and correlations. We know that as oil begins to go up in price, the U.S.-Canadian pair begin to drop. Why? Because oil is a major export for the Canadian dollar, has a major connection to the currency. It's a commodity-based currency. So we can see the structure. Always look at structure on a larger time frame first. So we see prices drop, we see the correction, and then prices dropped again. So we completed our point right here at this 113 extension. And now price is rallying up. We just converged at the 50-day moving average on a weekly chart. We also have our equilibrium point of our Fibonacci based on this swing right here. So this swing from high to low moved into our 50% retracement. Now we have our 50-day moving average and a bunch of other confluence levels as well, like big figure and a bunch of other things that are happening. Now here's the thing. Oil is going up, we should see this go down. Now, what's influencing the USDCAD? Well, obviously, there's a lot going on with the interest rates, them not changing it. There's also the dollar being bullish as far as the pair is concerned, even though they were dovish in terms of some of the other things of what's going on with the FOMC and all that. But we're not really looking at the news right now. We're just looking at structure. But here's the thing, right? We're still in a bearish structure. You know, here's our high, here's a lower high, here's our low, here's our lower low. And so, yes, we've created a micro high, higher high from here to here, but at the same time we need to wait and see what happens. But the overall structure is still bearish. We're still waiting to see what's going to be happening. So as price could potentially come up to this weekly trend line and then reject, and of course we have our confluence here with this block, this liquidity block right here. This could be a possibility if price does make it past the 129 handle, 130 big figure. So we're going to be watching and waiting. Now here's the thing. I'm bearish on this, believe it or not. Even though, yes, head and shoulders, we see a break, we see what's going on, I'm still bearish. I'm not in a trade yet, but I'm bearish because why? Well, I'm bearish because of oil being so bullish, okay? That's one of my main reasons. But I'm also bearish because of the overall market structure. We're still bearish. We haven't broken these these highs yet, so that's the reason why. Yes, we've taken out this high. Yes, we're sitting right here at a resistance level. It's possible we're going to go even higher, but the reality is I'm more targeting for if I want to see a massive trend change and really get on this up move for the long term, I got to see weekly structures get broken. I got to see a larger time frame get broken. So we're looking at these highs at 138. Once that gets taken, maybe we might see a reversal from here. Now, I know a lot of people have been asking me because, you know, I also do trade cryptocurrency, and a lot of people have been asking me, well, what's going on with crypto and how can I take advantage of it? So let's analyze some of the price action with the crypto pairs that I've been trading. So obviously, first thing we have to look at is Bitcoin. What's going on with Bitcoin? So when I analyzed it a couple weeks ago, we saw this formation taking place on the daily chart. We have our pretend head and shoulders. So at the time, this didn't happen. So we're wondering, is this going to be a head and shoulders? If so, we might see price break down and retest the 4,900 level. Well, clearly that didn't happen. We see price actually, let me delete this. Let's go to, let me actually just delete those structures here. Okay, so now if we analyze what's going on, we can actually see what's being formed, right? Oh, let's delete that. Let's clean that up. So here we go. So we are in this corrective move. So we have this nice impulse out, and we've been in this corrective move. We're now running. We've been just taking this high out. So we potentially might come up and retest 6,500 or right around there before we pull back again. So obviously we're still bullish. We're bullish until when we see a structure break. And remember, the definition of an uptrend, higher high, higher lows. Definition of a downtrend is lower highs and lower lows. So we're still in an uptrend. On the daily chart, we can see higher low, higher low, higher high, higher high. Now we're in this correction at the moment, so let's analyze what we should expect to see take place. We have our 1, 2, 3, so we potentially, one of two things are going to happen right around here. Okay, now we want to watch this. So right now at this resistance level, price has just broken through. It's holding. I'm expecting to see price come up to 65. I'm thinking we're going to see 6,500. We're going to see 6,500. If we see 6,500, then our next move is to wait and see how price responds. If this level holds, we'll see a pullback. If this level breaks, we're going to see price probably continue to move up to $7,000 a Bitcoin. And for those who have Bitcoin, I know you'll be happy. Okay, let's look at Ethereum really quick. Let's analyze what's going on. Now, what's the value? See, everyone asks me, like, how do you trade crypto? Well, the truth is, it's a combination of things. You have to do your research, knowing the background of what's going on with the specific cryptocurrency. You want to know what's going on. But the second thing is price, right? So whether it's a stock, whether it's oil or gold or a currency, people move the market. So because people move the market, we see repeatable patterns again and again and again. So looking at what's happening, we're in this structure, compressive structure on this daily chart. We see price ran up massively and then began to pull back, ran up again, and then so it's like winding up. And now we're seeing price came up, but just notice how price is now just sitting right here. We're not seeing a lot of moves. See a break in the short-term structure. It's potential that we might see price actually come right back down and test this trend line. So we're going to be looking at that to potentially happen. If we fail to break 313, if we fail to break this resistance level, I'm looking to see price drop right down here, and that could be an opportunity to buy. So we're going to be looking at that. Now, here's a trade I recently just got into, which is Stratus. Okay, so we're looking for a long opportunity, and so why? Let's analyze why really quick on a larger time frame. Just look at this on the weekly chart. This is when it started. Okay, we see price rallied up, and then what do we see? Pullback, right? Nice little corrective structure, and so price is right now at that point. Right over here, this level here, which is 0.0004 Bitcoin, okay? We can see price sitting right there. And so notice on the short term, on a smaller time frame, we see this nice corrective structure here. Price just broke out, rejected off our 50-day moving averages, now moving back into our trend line. So we're retesting this trend line. So we're going to watch and see what happens here. But I'm long. I'm overall long in this pair. Not a pair, but this particular cryptocurrency, and this is something I'm going to be holding long term. So that's something to basically look at and see whether or not the opportunity is going to unfold. So if you're looking to trade an altcoin, this could be a very good opportunity for you. And if you want some information on how to get into trading cryptocurrency, just hit me up. You can email me at support@digitalinvestingschool.com. You can also if you're a part of our Telegram, just send me a message. Okay, so that concludes our weekly review. Always remember, when you're trading, trade smart. Don't trade with emotion. Do not trade with greed, and do not trade with hope. Hope is not a winning strategy. Stick to your trade plan. If you haven't watched the trade plan chapter on Foundation to FX, make sure you do. Print out the PDF that goes with it, because trust me, it makes all the difference in the world when you have a rule-based system in your trade setup. Why? Because it removes the emotion out of the equation and has you focus on rules. And that's the key. Discipline is the key to longevity in this game. So thank you guys. Take care, and looking forward to our next review. Take care.